My friends, we're here today with Claudia Turkaz.
Hello.
Two times in a week.
2 times in a week.
Woo, 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 woo.
We're so silly. Happy Monday, everybody.
Happy Monday. Hey, we want to talk to you guys about do's and don'ts of down payment assistance programs. There's
Yes.
lots of talk about down payment assistance programs, and I just wanted to bring up today, this is some do's and don'ts pretty much about just getting a loan in general, and we're going to talk a little bit about the down payment assistance programs that are available. But so when you think about do's and don'ts, Claudia, what do you think, what's the first thing that comes to your mind in regards to buyers, do's and don'ts?
Okay, so once we have them pre-qualified, don't go out and get new debt.
Come on.
Seriously.
I can't get a car?
No, you can't get a car. Or
can I buy a boat?
Washers and dryers for the new home.
Darn it.
You know, or, I mean, people get excited, right? So what's the natural thing? It's like you want to go shopping for new furniture and for how much your blind's going to cost me if it's a brand new home. If it's a resale, then it's like, oh, I want to fix the carpet because I don't like the color that the other seller had. You know, teal's not in anymore. You know, that kind of thing.
For some
Maybe it
people,
is,
they
maybe
like
it is,
it.
maybe
They're
it is,
like,
maybe it is.
you know, it reminds them of grandma or something.
But I would definitely say it would be, okay, it's almost like halting, right? Once you get pre-qualified, it's any financial decision that you're going to make, call your loan officer first to make sure that it's okay that you do it.
Yeah, for sure. And even paying off debt. Even paying off debt, thinking, I'm going to close this credit card.
Right.
I shared with you guys a couple weeks ago, I closed a credit card, my
How long?
FICO
It went down like almost what?
40 points.
Yes, it's ridiculous.
Which 40 points can take you from one interest rate to a completely
well, and it can
another.
also take you, if we're doing down payment assistance and you have a 660 to qualify, and you are thinking, I'm doing the right thing, I'm going to pay off this $45 credit card and then close the account, and all of a sudden it drops your score 50 points, you might no longer be at even at 640 or 660 to qualify for the down payment assistance.
Yeah.
So it kind of is a trickle effect,
Yeah.
right? It's just a domino effect, and we don't want to be in contract and have you not qualify anymore.
Yeah.
So there's too much at stake.
The down payment assistance programs, there's awesome programs out there, but you have to fit in a box. You have to fit within there. You can't make more than a certain amount of money. You can't have FICO scores lower than a certain amount. Your debt to income ratio has got to be a certain amount. And then they'll give you the down payment assistance money towards your purchase, but you have to fit in the box. But just like getting a loan, you have to fit in a box.
Correct.
So there's 2 boxes you need to fit in if you're going to go for the down payment assistance. So great point. Don't go out and buy any big purchases.
That would
Don't
be
buy
the
anything.
number one big don't for
even if your car dies, like, just let's talk about a solution, a Uber, rent a car. Don't make any big purchases before closing. Vicky, can I buy my dream dog? They said 90 days, no payment, $5,000.
It must be Dream Home, maybe?
No, Vicky, I don't know. I don't know what's happening there.
Vicky, call us.
Yeah, $5,000. $5,000 for a dog? Or I don't know what's going on. Okay, yeah. So big purchases was definitely on my list. Another thing I thought about was definitely do your homework in regards to, and I've said this before, your realtor and your lender partner. Not everyone is created equal, and I know some of the online programs of lenders. You go in, you plug in all your information at midnight, and they spit out a pre-approval.
Without their documents?
Yes.
Without the customer's documents?
Those, I don't prefer those. I know they're convenient for the consumer. I prefer to be able to have somebody that I know and trust, because I guarantee down the road there's going to be an issue in a transaction. That's just how it is, and it's our job to handle those issues on your behalf as a client. And so hire someone that you know that has experience in the market that you're in, that has a good team, a good relationship with someone that I know I can call Claudia, or if something goes down, she's going to answer my text over the weekend. Hopefully she enjoys her weekend, but I'm not going to bother her for no reason, but sometimes I do.
And that's okay. We understand that this is not a typical Monday through Friday 9 to 5 job, right? Now, most of the time when people can go out and look at houses is during the weekend, and so a person that's looking for a house that might have gotten pre-qualified for 300,000 is looking at one that's 275 and doesn't know, like, well, what's the difference? What's the difference in payment? So we know that, you know, weekends are sometimes necessary to pick up the phone and make phone calls or whatever. But I want to get back to the down payment assistance program a little bit, just to let the audience know that not all loan officers or mortgage companies like doing down payment assistance or even offer down payment assistance programs, because the reality is that the commissions are lower on those payments, and so they might try to steer the customer from not doing down payment assistance so that they can get a full commission.
Yes, and I've had lenders work with lenders before that didn't want to do them for that reason, and so definitely ask those questions. Is your agent and is your lender, do they work with down payment assistance programs? And you know, the bigger thing for us is the reason we do these programs, and Claudia gets hit on her side probably the most around it, is that we want to treat the customer right. If that's what they need to get them into a home, not everybody can save. Not everybody is as good at saving as others.
Yeah, I'm not a good saver.
I'm not either, and I'm working on that, and it's my relationship with money I'm really working on, but there are these programs for that. And
correct.
In that same breath, when you're comparing your program to your buddies that's at work or to the butcher at the store, there's so many times that people say, well, my interest rate is such and such. There's so much that goes into what you're given in your interest rate. It's not just your lender, it's your FICO score, it's your debt to income ratio. If you're getting down payment assistance, if they're loaning you money up front, you're paying a higher interest rate than the average Joe that's not getting down payment assistance, that is good at saving. So just keep that in mind, because nothing's free, guys. Somebody's got to pay for it.
And then the other thing too that I would probably just encourage you guys to do is not pay so much attention, because a lot of people start their search on like Zillow or, you know, some of those online home search, you know, websites that are out there, Redfin, whatever, Realtor.com, and so they're always doing like a zestimate of your payment. Well, what you don't know is that they're using a very low interest rate. They might not be calculating taxes and insurance, because remember, it's a tactic to get you to pick up the phone and call them. Right? And then a lot of the times you have the bait and switch kind of thing where they have you, and then you're thinking you're getting something, and then they explain to you, well, you know, that's your FICO score is this low, or that was only for this program that you don't qualify for. And so don't just automatically assume that everybody fits into the same box, and always get a second opinion. Even if I'm the first person that you come and talk to, I always tell my customers, listen, here's your estimated loan, like your loan estimate. Take it and compare if you want to. And then if you do find somebody that's lower, come back to me and I'll see if there's anything that we can do to try to match that. But I always think it's great to get a second opinion. Anybody that's being honest with you and giving you the best rate is going to actually encourage you to do that, because they have nothing to hide.
Yeah. I always prefer to give my clients, and Claudia and I do this, what we overestimate. I rather say worst case scenario and you're coming out of here happy, a happy customer, a happy client, and you tell all your friends that we're so great.
We're in this for the long haul, so we're not just looking at the next one and then not worrying about, okay, in 5 years or 3 years we want referrals and we want to build our business based on a referral basis. And so why would I want to gouge somebody and then have them go tell 10,000 people, right? Because you get a good experience and you might only tell a couple people, but if you have a bad experience, you're going to tell everybody.
Yeah.
So
how long you been in real estate?
Going on 23 years.
23 years, and I've been 15 years, and so
we have almost 40 years.
We
of
are
experience.
like the bomb.com over here.
Yeah. No, and there are different types of down payment assistance programs, and even if you qualify for down payment assistance programs, sometimes there might be a better option for you, where if you have great FICO scores, then it's kind of one of those things where it's like, okay, those interest rates are a little higher, so if we can, you know, I'm going a little bit above your head, but premium pricing alone, where it's still a lower interest rate than what home down payment assistance is offering, but yet we could still give you the same amount of money that you're going to be getting from them. So it's just having somebody that's an expert, knowing your situation and kind of working with you on your needs, not my needs.
Yeah, and Claudia is great at doing we can do this option or this option. Use the down payment assistance. Their interest rate will be higher, but this is what the payment will be, or come in with money and it's going to be this. And so weighing out the options, and in that, the other piece that I was thinking of was one of the do's around down payment assistance would be to save your cash. Yes, you're going to get down payment assistance, right? You're going to get 4%, 3 or 4%, depending on what program you use. But that's just down payment, and that's the requirement. The lender is requiring you skin in the game, and that skin in the game is they get it back because they're getting a higher interest rate from you, right? But there's also closing costs, which are different. They are what are
closing costs would be what if you're doing down payment assistance, they have their own fees. Then you have our fees, which is an underwriting and a processing fee. Then you have your appraisal fee. Then you have title and escrow fees. You have your prepaids, insurance, taxes, that sort of stuff. So typically a general rule of thumb is about 2.5% to 3% for closing costs. Again, we're overestimating, but what we don't want is to say, oh, you're only going to need $4,000 for closing costs, and then all of a sudden there's an HOA involved and they have transfer fees, and now you're at, $5,000 for closing costs.
3 to 4%.
So
save your money, because there are additional fees, and that can, depending on the market that you're in, you can negotiate the seller to pay a portion of those or all of those. Or
so that would, I don't mean to interrupt you, but that's where a lot of, or not a lot, but some real estate agents and loan officers, their tactic is to advertise 0% down, like 0% down on your home. Come in with no money down. Technically, that can be true, but realistically it's not. So what they do in that situation is they're assuming that the person's going to qualify for down payment assistance and get 4%, which if we're doing an FHA loan, it would cover your entire down payment, and then they're hoping that that agent is going to negotiate all of the closing costs paid on behalf of the seller on your behalf. So then that technically means that you would come in with 0%, which is not true, because you have an inspection, that's $300 that is out of pocket right at the beginning, right?
Yep.
Then you have an appraisal, that's $450 if you use our company, that you have to pay up front. And then you have your earnest money deposit. Obviously that can be reimbursed at the close of escrow, but you're still going to need that money in good faith to put as a deposit in order for the seller to accept your offer.
Yeah.
So there are literally no zero down payment programs unless everything aligns together and you get the down payment assistance and you get the closing costs covered by the seller.
Yeah, you find the house that doesn't already have 10 offers that you can afford, that you love, that will also pay your closing costs.
Because even VA is not 100% finance. Well, it's not zero down or zero closing costs, because you do have zero down, but then you have the closing costs.
And that is a very big misconception. So whenever people are wanting to use down payment assistance programs, or any program, but down payment assistance, I make sure that they just save your money. Always save your money. I'd rather you have more money to throw a party after closing at your house or buy new furniture. Save your money always. And we like to give you worst case scenario, because we don't want to be left 11th hour with not enough money at the closing time.
Yep.
What other anything else you wanted to cover about do's and don'ts, or any down payment assistance?
So there's different down payment assistance programs, and every down payment assistance program has their own guidelines. The one that I like to use the most is Home is Possible, because they're the ones that have the most lenient guidelines as far as how much income you can make, your FICO scores, where the property's located, all of that. And so you take everything into consideration. But there are different types of down payment assistance programs, and so again, when you're talking to your loan officer, I would probably have them explain to you all the different types of down payment assistance programs that they offer, and see if one is best suited for you.
Yeah, there's some of them. There was some North Las Vegas. You had to purchase a home in North Las Vegas to be able to qualify. So that
the HOPE program last year was 24 zip codes, and that was it. So it's all different.
And they changed. There was another program that was the unincorporated area of Clark County. They
like culinary, for example. That's that's an unforgivable loan or a second mortgage that you have to pay, even if it takes you 20 years to sell or refinance the property. You still have to pay that money back.
That's a great point. So
there's
let's talk
different
about
ones,
that. Like,
right?
so not all of them are automatically forgiven.
No.
So some of them, some of them are forgiven after 3 years, some
Correct.
after 5. And some aren't forgiven.
There's a new one that's
closing.
coming out that is going to be forgivable after 15 years. So all those things, that you need to kind of be aware of, because if your loan officer doesn't explain that to you, and in a year you're refinancing or selling your property, and then all of a sudden they say, oh, you got to pay this money back because you agreed that it was going to be 3 years, 5 years, 15 years, so now you're out that money.
Yeah. That's and so it's like a silent second until.
On all of them, it's typically a silent second until you meet that time lapse of how long they have. And again, everyone's different, so it doesn't all fit into the same category.
Yeah, that's a good point. That's a good, that is rarely brought up when down payment assistance.
Well, and everybody says that, culinary, because there's so many culinary workers, but truly,
which is awesome.
That is specifically for the purpose of somebody that just doesn't have the money because they haven't saved it up, and so culinary saying, okay, we're going to let you borrow that money to get into the property, but this is not a forgivable loan. You'll have to pay this money back.
And their interest rate is still higher. They're still paying a higher interest rate, but they also have
I think on the culinary it's not. It's the current rate. So the same thing for, there's a down payment assistant. Well, it's not even down payment. So it depends on what you're doing. Like there's a conventional loan that allows you to come in with 3%. It's not considered down payment assistance because they're not giving you down payment, but they're allowing you to come in with 2% less than your average conventional loan. So that would be regular guidelines. And so again, all different
lots
programs.
of options. Well, let's just have a conversation of what do you need, what's your long-term plans too. If some of these down payment assistance programs require you to have that, let's say have the house for 15 years.
That's a long time.
That's a long time. Most people don't stay in homes for 15 years. Most. Sometimes people do, but most people don't.
The average is 5 to 7 years is when people are kind of upgrading or selling, refinancing.
Moving. Life circumstances change, and that's a long time. So that would have to be paid back.
Yep.
Right?
And it's prorated, some of them. Some of them are prorated. So if you have a 3-year forgivable loan and it took you, and you sell in 2 years, then they'll prorate whatever amount you took out, and then you only have to pay a certain amount. On some, it's the whole amount. So again, check with your lender.
Somebody the other day asked a good question. Why was the loan amount higher at closing? Remember you were
yes,
that
was one of my
question?
friends from California. So she said, how come is the loan amount higher than what the original, like once you pay your down
purchase
payment
price?
So the loan amount is sometimes higher than what you're putting down because on an FHA loan you have a upfront mortgage insurance premium that gets charged, and it's a one-time fee. But instead of having the customer come in with that money, it gets financed into the loan, and that's on every standard FHA loan. And the same applies for a VA loan. It's called the funding fee. And if you're not a disabled veteran, you have to pay that funding fee,
which is about $10,000, right?
Well, it depends. It's a percentage depending on whether it's their first VA loan or their second VA loan, because they're always different. On FHA is 1.75% of the loan amount. So they tack it on there. So that's why. That's a great question to ask, And it gets financed. Yeah. Instead of having to come in with that additional money. And I've never had anybody try to pay it up front or say, hey, I want to pay it as part of my closing costs, because it's disclosed as part of your closing costs, but then it's tacked on.
Financed in there. I think that was some good points that we covered. Yeah, we just wanted to jump on here. Quick little message today, do's and don'ts of down payment assistance. There are a lot of programs. There's a teacher's program.
There is a teacher's program.
You have to be a teacher.
There's a great teacher's program. You have to be a school teacher, either K through 12, but it's $7,500 down towards either your down payment or your closing cost, and then it's a below market interest rate. So I think the last time I checked it was like at 4.25, 30 years fixed. And that's a 5-year forgivable loan, and it's only FHA.
That's a good program. Yep, but
then there's a VA program. Yeah. It's called it's a Heroes program, and so that one is the exact same thing. It's either because it's a zero down payment. Then what they do is you can either take 3% to pay towards your closing cost at the current market value, whatever they have, or you can opt to bring in your own closing cost, and then it's a fixed rate of 4.25% fixed for 30 years, which is a really good interest rate.
Yeah. That is good. So, guys, there's lots of down payment assistance. Contact us for, your specific situation. Ask questions, even if you're not in Las Vegas or Clark County, call us anyway,
Yep.
contact us anyway. We'll be able to direct you to a professional in your area. But there's a big thing I always run into is just save your cash. Down payment is different than closing costs, and people, I think, just see those zero down programs and think that they're all in with nothing, and they don't do that anymore. Maybe during the Wild West 10 years ago or more, it was
Stated income.
scary time, but
80/20.
that's what made us into a bad situation.
That's right. They were giving anybody that had a pulse a loan, and
Barely.
look what happened, the
Yeah.
mortgage meltdown.
Yeah.
We don't want that happening.
No. We're
Too many people lost their homes.
in
I was
it-
one of them.
Yeah, we're in it for sustaining a long, healthy market. So we have some options for you. So let us know if we can help you, answer any questions.
Give us the call. What's your number?
What is my number? 702-353-5161.
And mine is 702-528-2422.
We'll put our information in the link too. All right, guys, have an awesome day. Thanks for
Bye.
joining us.